Yo, what's up? So I just want to do a quick breakdown on this new strategy that I'm working on. Essentially, I'm going in with 3 contracts and taking 2 contracts off at 3 ticks into profit and leaving the last contract as a runner. Once price is into profit by 6 ticks, my stop will go to break even and then trail price by 6 ticks. Essentially, I'm having a hard time sometimes knowing when to leave a runner and when to not leave a runner, but I find that I can consistently hit 3 to 6 ticks pretty confidently, but then what ends up happening is I'm like, oh, I should let it run, it's gonna go, and it doesn't. It comes back and I either take a scratch or a stop out when I was in profit, and I don't like giving back those profits so consistently, so trying to kind of lock some of those in, but also because I've tried just taking the whole thing off at 3 ticks, and a lot of the times I leave a lot on the table because it just keeps going. So this is a way that I can kind of take most of it off and then let some run to see. So we'll get into my breakdown on my main scalping strategy, which is the two-way trade setup. Okay, so this is the breakdown for the two-way trade setup. This trade can either be played from the buy side or the sell side, but we want to establish who has more control, buyers or sellers. And we also want to be aware of market structure to identify if there's a higher probability of a break to the upside or the downside. Once we have established this, then we are better set up to shift from our two-way trade setup to a possible absorption continuation if the range breaks. So essentially, I've been caught offside way too many times playing these ranges. I just get too caught up scalping it one way to the other, and then all of a sudden it breaks to the upside or the downside, and I'm still trying to play the range. Because the range is not super consistent. You're not just always gonna you're not gonna just call the high and the low to the tick. Like, the range changes, and they do that intentionally to pull the liquidity that's sitting at the top and the bottom of it. So the range is always kind of changing and moving in kind of in a direction. So once it starts to break, sometimes it's not as obvious as you'd think, and you keep trying to play it, and you just get killed at that point, or I do at least, because I'm not willing to accept that what was working so well for me is now over and gone. So I just try to fight it. So me establishing which way I think it's going to break previously, prior to me trying to play inside of the range at all, is really helps me being able to shift gears once I see it start to break. Then I can shift gears. I can shift from my two-way trade setup to my absorption continuation setup, because essentially what we're doing inside the range is playing absorption reversals, but once the range breaks, we could look for an absorption continuation at the retest of the range. So we want to identify that prior, so it's easier to shift gears when that happens. So for an entry, in order for us to have a setup, we need to see large volume being absorbed on the bid, as well as large volume being absorbed on the offer. Ideally, we want to see size stepping in on the bid and offer at specific price levels, creating a small range. There needs to be enough of a spread between the price levels to accommodate a trade. Ideally, we want to watch price trade back and forth between the buyers and sellers, consistently stepping in at the same price levels or similar areas. We should see price holding at these levels, and ideally the aggressive buyers or sellers back off and the passive buyers or sellers take control and start moving bids or offers up or down, moving price with it. So essentially that's the absorption reversal that we're going to be looking for at the highs or lows of this range. Okay, so I've got a few trade examples here, and I'm just going to let it play and kind of run through it. So essentially right now we're sitting at the lows. Obviously, we formed a little bit of a range here. We've got strength from the buyers on the bid and strength from the sellers on the offers, and they've kind of formed this little range here. And you can see we've actually built our POC here, our point of control, and a lot of volume in this area. So right now, I'm looking to take a long. I'm looking to lean on this liquidity on the bid. Okay, so I enter the trade long right below the POC. You can see strength on the bid, buyers reloading the bid, sellers pulling offers, and you can see my auto arm strategy. So you can see I've got my stop loss for 3 contracts, 3 ticks below my entry, and my take profit for 2 contracts 3 ticks above my entry. So essentially looking for that to happen. So essentially we get the 2 contracts filled pretty much instantly. Then I'm going to cancel this 2 lot and I'm going to let this 1 lot run. It's just going to trail price by 6 ticks. So essentially that was a pretty good trade. I think we got out at the right point on the trail. So same thing, same setup, but we're going short now. Now we're at the top side of the range and we're playing it back into the POC. So two pretty good trades, I would say. The auto arm strategy with the 1 lot and the 6 tick trail seemed to work out pretty good. I think that was a good place to get out. Okay, so here I actually went long for, I don't know if you saw that, but I actually clicked twice. So I'm actually long for 6 contracts right now. And that's why I just put the 3 ticks into profit, because I'm not trying to let 6 contracts run. Or 5 contracts or 4 contracts or whatever it would. Wow, my math is terrible. But yeah, so basically I don't want to let more than 3 contracts run because I don't want to take those pullbacks on a small account. So once I got into, really this was mismanaged. I should have a 6 lot here as a stop loss, as a fail safe, and I should have done that right away as soon as I entered. So that's somewhere where I could probably improve this auto arm strategy. Or maybe if I want to get in with 6 contracts, I should create a strategy with 6 contracts so that my stops and my take profits reflect that instead of me just double clicking, because that kind of threw everything off and I'm not managing it well. So we got filled on the 3 lot, which was good, because if that came back on us, I wouldn't have been ready for that. I was not ready to click out. I didn't have a stop. Like, clearly my thought process here, it was on the upside and I was not managing my risk well. So that could have gone really bad, that trade. So now we're looking to take a short. We got slipped on the initial. And then I chased it. And I ended up getting filled for both. I'm pretty sure I ended up getting filled for both of those. So again, I'm now short 6. So I should be adding another stop here. I should have 6 contracts here on my stop. But I do add a 3 lot here. Because I realized, I know that I'm short 6 and I want to protect myself. So between these 6 contracts, I've got a full stop here in place, which is better than the last trade that we just kind of gambled, honestly. Okay, so now I've basically locked in profits. I don't want to lose any more than this, but I think price is going to reverse, so I'm trying to take profit down here instead of letting it come back and hit my stop. But it did hit my stop. So we're looking to go long here, obviously. Leaning on this liquidity. Instantly what I'm seeing here though is that 205 lot sitting on that, which we traded right through it, but then they reloaded above it, and we did trade 70 at that level. So these are instances where it might just be a good idea to just take profit on the 1 lot instead of letting it run. But then I get back in because of how easily they bought through this. And then they started pulling offers. So that gave me confidence it was going to keep going, so I got back in. So there's 2 things I could have done here. Is I could have taken profit here, waited for the pullback, and got back in. Or I could have canceled my stop and put it at break even and just let that one contract really run with like, with a little bit of breathing room. So there's two different ways that I probably could have managed this better. So we do get the fill on the second entry though. And then again, I'm seeing the absorption here. But then look at that. So that's actually a great example because I would have taken profit there. On that absorption, I probably would have taken profit. But instead, somebody bought a ridiculous amount of contracts and price just spiked up. And because I had that runner with the trailing, I was able to capture some of that, which I never would have got otherwise. Okay, so instantly getting those fills on those two lots, which is really the idea of this strategy. You can see there we got basically scratched on the last contract, but again, that's the idea. Is we want to take profits quick on the two contracts, and then leave the runner just to kind of see what happens. So I think I should tighten up my process with the runner. I should have some more rules about when I'm leaving the runner, when I'm cutting it, when I'm taking profits, and not just relying solely on the auto arm strategy. Okay, so this looks like I'm gonna stop out. Yep. So that's the thing though with this strategy is, 3 contracts, 3 ticks. It's not a lot, but you've got potential. You've got potential with the runner. I don't really like getting in with one contract and a big stop and just seeing what happens, because like that's just, I don't know. I find that I can predict the next 2 to 3 ticks pretty consistently. Anything past that seems like a little bit of a crapshoot. So I like to utilize my edge, which is leaning on the book and the liquidity and how it's trading, and trying to get into a free look by getting those 3 ticks, and then I'm into a break-even trade, and then I can see what happens. Because after that, my edge is gone. So I kind of need strict management around that for myself. Yeah, it's kind of unfortunate the last trade in this series was a stop out, but I guess that's full circle. It's all part of trading, and gives a pretty good idea of what this trade strategy has to offer, and where I need to improve it. I think I need to create some more rules around how I'm managing that runner, and also maybe just create some more rules around how I'm going to manage that runner, whether, because obviously there's different situations where I should be managing it differently. Because a lot of the times just trailing by 6 ticks, we didn't get much of a runner. So it might honestly be better to leave that runner at break even, and then maybe trail it after 12 ticks into profit, and then maybe trail it by 12 ticks, maybe even 16. I don't know. I'm going to go do some sim trading and do some back testing and play around with that a little bit and see if I can't dial that in a little bit more. But anyways, yeah, that's the 3 two-way trade setup. Until next time.